LUNR stock, or Intuitive Machines stock, debuted as a SPAC not too long ago, which we covered and warned investors about a hype session back then. Well, we happen to be there again, and that's because that very shortly they're hoping to land a machine on the moon. Now, you need to remember that the efficient market hypothesis tells us that stocks don't suddenly appreciate in value for no reason. In the case of NVIDIA, they soared because of a tangible change in financial metrics. So we're going to look today at what's happening with LUNR stock. Now, we noticed that there was some price action going on with Intuitive Machines stock because on this video, suddenly we started seeing a bunch of "this aged well" comments. And we took a look to see what these people were talking about, and apparently they looked at the cover slide here and at the appreciating stock price, and that's all they could vomit forth in our comment section. But thanks, guys. We really appreciate that. It sure did. So here's a chart of Intuitive Machines stock over time. I took this from Charles Schwab because some of the other data vendors out there seem to have gotten the number of shares incorrect in calculating market cap. So I used Schwab as a data vendor, and you can see that massive spike right in the center, the price spike. And that's where the arrow is pointing to, where Nanalyze warned investors that when shares of this $10 SPAC were cresting $80, that if this performs like other SPACs do and should, shares will be priced at $3.90 or less. And you can see what eventually happened there. They traded down to around $2 a share. This was taken from that slide deck, and you can see that the price in after hours, they're actually crested $100, giving it a simple valuation ratio of nearly 60 with a $9 billion market cap. And just as we predicted, the shares went down well below the SPAC price, and now another hype cycle has started, and they're trading somewhere around $9 a share. So I think they briefly went over the SPAC price, and the reason for that, again, is the potential moon landing today. So this chart here shows that price action from when we warned to where we are today, and what's happened is that shares have risen around 265% in a single month. Why is that? Well, this is rather interesting that since the first attempts in the early 1960s to land on the moon, more than 50 attempts have been made unsuccessfully. And just last month, Astro Robotic got its first moon mission off the ground. And that LUNR's landing happening shortly is going to be a big deal. It's all over the news. And this relates to the Artemis program, which is a bipartisan initiative in the United States to return humans to the moon and eventually, of course, Mars. Now, unlike the Apollo program, which landed humans on the moon, the Artemis program is relying heavily upon partnership with the private sector. So they're expected to spend upwards of $93 billion by 2025 with the aim of landing a human on the moon again in 2025. That would be next year, so we better hurry up and start landing something there. And, of course, this powered habitable base camp by the late 2020s. What's interesting about the moon landing is when you look at the computing power that was used. So Apollo 11 had the Apollo guidance computer with 2,048 words of memory, what we would refer to today as RAM, while they had 72 KB of read-only memory, which is about, it's 72 KB. So very small computing power. Now, when we look at the hype, the first commercial landing on the moon makes sense, and Joe Retail Investor sees a ticker and runs off to invest in it. Amateur hour technical analysts see the hype. There's a self-fulfilling hype cycle.
Martin, you're up $1 million.
And the bull thesis here says, well, if LUNR is successful, then they'll get all this follow-up business. Well, they already have plenty of business. Most of that comes from NASA. When we look at their contracts, we see three major lunar access contracts, IM-1, 2, and 3. Here are the monetary amounts for these. And this statement here that's rather telling, as of September 30th, 2023, so that would be their first 3 quarters of 2023, all three of our lunar missions are in lost positions. Well, that's not really good. They shouldn't be subsidizing NASA's efforts to land on the moon, and those losses are due to delays, technical challenges, additional labor, etc. And they say here over 80% of their revenues come from a small number of customers. Based on information from the SPAC deck, that would be one firm, I think it was Axiom, for $6 million, and the rest coming from NASA. And they have other potential revenues. The point is that they have a very heavy reliance on NASA. And here you can see the contracted value of their NASA lunar access contracts, $289 million. That would have been at the end of 2022, and that moves up to $303 million as of Q3 2023. So you can see that these fluctuate over time, but a good chunk of that has already been received. They have $51 million in cash right now, so not nearly as much as you would expect from their SPAC debut, whatever that happened to put on their balance sheet. They say that their backlog, and this is work that's contractually obligated to be performed. So if they receive more work as a result of a successful mission, it's just going to go onto the backlog, and how fast they're able to process this determines the amount of revenue they're able to realize. And they're telling us right here that 64% of this backlog they expect to recognize in 2024. So, and they're a little bit presumably behind on their filings. We'll see what the remainder of 2023 looks like, but it's certainly not going to add up to the $300 million they promised us on the SPAC deck. Now, they did manage to come close to their target for 2022. You can see that here. This slide was taken from our old presentation, and it said, well, they need $36 million or 38 to hit their target. They got 36, close enough. Then we said they'll need an average of $75 million per quarter in 2023 to hit this $300 million target. Well, the first 3 quarters of 2023, they've brought in just $49 million in revenues. So there's a couple things I wanted to point out here that you need to pay attention to. So the table on the left, you see the highlighted cost of revenues against revenues. In 2021, the revenues produced, the cost of revenues was greater than that. So that's not a business, right? They're subsidizing somebody else, NASA in this case. Then you have 2022, and they actually had COGS less than revenues. That's good. So they're able to have a bit of a positive gross margin there. But what's interesting here is look at the table on the right. So in 2022, they had cost of revenue. This was 3 months into 2022, exceeding revenue. And then suddenly, in that fourth quarter, something happened. So they actually had cost of revenues less than revenues. So they moved to a positive gross margin. Now look what's happening for the first 3 months of 2023. You see how operating expenses, while revenues are roughly the same as in the same period of 2022, operating expenses are a fair bit more. So is something magical going to happen in the fourth quarter of 2023 so that they have a positive gross margin? Or are they going to revert back to a situation where they're selling something that costs more to produce than what they're getting for it? And that's just not a business we would ever be interested in. Now, the big moon landing, that results are expected today. I don't know if that's going to happen before this video goes out. It doesn't really matter, though, because we can predict the outcome will be somewhere along the spectrum of total success or total crash and burn failure. And of course, the company will spin it as a success regardless. But the point here is that if NASA has allocated billions to this Artemis program, they're not likely going to stop if there's a failure, right? They're going to continue trying to land a vehicle on the moon. Now, if this is successful and they decide to invest more in a vendor in Lunar because they had success, then just add those additional contracts to the company's backlog. And if Lunar expects to scale things, they're going to have to take the $54 million in cash that they have and use that to try to scale for CapEx. If they're going to raise, that's either taking on debt or selling shares. And if the shares are going to continue being as overpriced as they are, they should sell the hell out of them. Now, one problem you're going to see with this stock right now is all the tool bags on Twitter pumping it. And you can read this stuff. I love this one at the top. They, whoever they are stealing your money and shares legally, right? So it has nothing to do with all these Muppets out there pushing and pumping this stock. It has to do with the man, right? Why it could spike 500%, holding until we hit 50, all right? He's going to buy a Subaru with his returns.
The guy made $1 million.
It's $136 today. They, whoever they are, have to buy them all back at some point. I just literally I put in the LUNR ticker and just recorded the first, I think, 8 tweets that came down. So this thing is just being pumped all to hell. It's the same exact thing that we saw the last time we warned about this stock, and we're spot on. So why is this being pumped? Is this a concerted effort or a loosely organized one? Well, the comments will tell us typically in terms of the volume and how amateur hour the people are, how well they speak English. Sometimes we'll get a lot of people that don't speak English very well preaching the merits of a particular stock. Oh, that's rather interesting. It's probably a very organized effort where labor is cheap. And this may, of course, spread to other space stocks. We're not seeing that yet before it fizzles out. It's a typical meme stock BS that feeds people's greed. Stock prices, in this case, don't reflect intrinsic value. We wouldn't buy shares of this company at any price. There's customer concentration, risk, shifty margins. It's hyped to the moon right now. And, of course, space is the riskiest theme that we cover anyways. Now, when it comes to valuing a stock, it's the present value of all future cash flows, and gross margins show you the potential for profit, and it just doesn't seem to be there. NASA is the BSD in the room, and this company has no leverage at the negotiating table. And what will the next administration think about Artemis being a high priority? Is there going to be better things they want to spend that money on? So this isn't an overly profitable venture, and I think if you're interested in investing in LUNR stock, then you ought to wait until the moon dust settles. Now, for those of you who want to invest in space, and perhaps this is the first time they're looking at doing that, there are a few companies out there that are interesting, worth looking at. One of those happens to be Rocket Lab. We like this stock. We took a critical look at it in a recent video. I'm going to put that up here. Please like this video, subscribe to our channel to support our work. Thanks so much for taking the time to watch this today.